For most of last year, markets traded inflation and rates. This week, they traded politics. And the Greenland tariff threat was the real world stress test that shook Europe and briefly spilled into global risk. Welcome back, everyone, to this week's session and our highlights from today. Looking at the rates, markets are actually looking past that inflation easing aspect story. We've discussed that a couple of times, but policy uncertainty and credibility risk still remain the priority over here. And, we've got the upcoming Fed meeting and communication and political pressure narrative in focus for this particular week. Inflation, US CPI narrative remains at cooling but not dead with 2.6% year on year in coverage. So it keeps the rate part sensitive to any upside surprises. We just kind of have to see how that particularly goes over the upcoming weeks. Liquidity and central banks, we had our World Economic Forum in Davos, and there was definitely a lot of messaging and market commentary there to reinforce uncertainty and some other conditions, especially without a rate hike. So we definitely have some trade fiction and geopolitics that could be getting us in some of those de-risking impulses. And lastly, we have our risk sentiment. So we're definitely mixed right now because the US markets did have a rebound after the tariff news came out and it was dropped against Europe from America's side. But Europe still absorbed the shock and ended a multi-week winning streak. All of that we will cover in our technical analysis and some fundamental news. But let's talk about one of the key takeaways from this particular week, the World Economic Forum Davos 2026. We had five key takeaways regarding geopolitics, macroeconomics, artificial intelligence, energy, and defense. And basically a summary of the geopolitics aspects of things. We had Trump's Greenland push exposing deep cracks in the US-EU trust and forcing Europe to basically push back and reprice the geopolitics risks. From the macroeconomic side, we had a lot of discussion regarding tariff threats, policy unpredictability, and obviously, as we know, that shook the markets, which we'll see in the charts today. In terms of AI, a lot of optimism returned over there with companies accelerating adoption while concerns shifted to jobs and inequality. Energy, well, Trump's pro-oil stance revived big energy's influence, challenging green transition assumptions and energy forecasts. But lastly, defense and security. The military conflict was avoided, but expectations for higher defense spending increased amid global uncertainty. Then we had our interesting aspects when it comes to the discussion itself for the tariffs. And this one I find really funny between America and Denmark. So Denmark has to keep paying the population of Greenland 600 million per year for their connection with USA. Usually, USA gets sovereignty over whichever parts they want for US military bases. USA gets mineral rights still. China and Russia aren't allowed in Greenland. And at the end of the day, it was zero cost to US for all of this discussion. It really goes to show how they can use their stance and bully the countries a little bit to get what the outcome that they're truly after. The other thing that I want to discuss today is regarding Altseasons and Ethereum Bitcoin pair. A lot of people with all these global uncertainties and a lot of fear in the market are thinking that we're not going to have a risk on scenario. I would argue that the charts argue otherwise because from these particular connections, what we can see in our altcoins versus Bitcoin chart and the Ethereum versus Bitcoin chart, it's clearly relevant based on one of the traders. And I've been following this particular chart for a while now, which is why I pulled up a summary from someone else. And you can see that the altcoins in the past, even up till 2021, had a descending trend. And from that descending trend, they broke out, had a bit of a retest, and then had a bullish move upwards. Again, creating another trend like that. They've broken out. They've done the retest. Very similarly, even in Ethereum versus Bitcoin, we've had a downward trend. We've broken out. We've done a retest. Again, bringing it in. Another downward trend, broken out, doing a bit of a retest. And my particular theory is obviously not financial advice, that we are moving towards a bit of a bullish sentiment and a bullish target moving forwards. So Steve is definitely going to share his insights based on his trading indicators about this a bit later onwards, but it's definitely a very interesting thing to watch out. Correlating news to this particular information is similar to this particular period where we have that consolidation downwards, we have a bit of a breakout, then we have a reaccumulation zone coming back into some testing and some downwards consolidation and a bit of a break upwards. We have the US dollar information over here that just came in. It has recently crashed. And basically, the US dollar index being the DXY, when that's having a bit of a bearish move, that generally means a better insight for risk assets. So I'm really interested for that to play out. Lastly, we have our earnings upcoming next week. So there's a lot of discussion regarding our earnings, and a lot of AI companies will be sharing how their recent investments and spending is translating into tangible results. So at the end of the day, markets want proof, not just narrative. And I'm very excited to see how the next upcoming weeks turns out. That will be all from me today, and I will pass it over to Steve.
Now, following on from your discussion in terms of Bitcoin, firstly, we'll have a quick look over at that chart overall. Now, since we were discussing things on Wednesday, not really much has changed in terms of the unit price of Bitcoin, as you can see, apart from, and I'll enlarge this so you can really see it a little bit more closely. Essentially, in terms of the actual price itself, has gone back up to test a prior resistance area, as you can see, in terms of one of the dotted lines that were actually listed up there, and then come back to basically essentially flat from where we were previously from there. So really not much has changed there. However, the lagging indicator, like we were discussing last time, overall, has basically come back down and is actually now essentially now testing the price area. Now, remember how we were basically talking about the fact that when the actual lagging indicator comes back through the Tenkan Sen being that blue line, that's normally a negative kind of indication in relation to general price action. It looks like it's potentially
Mm,
fruition. Okay, so that's one of the big things to look at overall there. On top of that as well, you're also noticing with Bitcoin, it's now starting to really start to pass through that cloud area to the downside. So overall, starting to look quite negative overall in terms of what we're actually starting to see here in relation to Bitcoin overall. But the story gets a little bit worse when we start looking over at Ethereum, because when you look at Ethereum, and I'm going to enlarge the entire screen in terms of this, what you're going to see there is that that lagging indicator overall has already passed through the price action, right? So
mm,
you start seeing that the negative tendencies are already starting to show through a lot more in relation to Ethereum when it comes to the Ichimoku cloud area and the
mhm,
lagging indicators there. So my overall, at least for the short-term aspects, in terms of taking a look through into relation to technical indicators, is not looking that great. It really needs to recover, getting through all the way up through all of these cloud areas for starters, but also making sure it recovers through that Tenkan Sen blue line as well as the baseline red area before you start even looking towards getting towards a bullish kind of indication overall. So I admire your bullish aspects in terms of the way you're thinking about things all the time, Yash, but it really needs to start showing through on charts before you can really start getting towards things. Now, having a look at your thoughts in terms of that Ethereum Bitcoin ratio, I love your thoughts about that kind of aspect as well. If you're thinking about Ethereum being strong, I totally agree with you. You need to actually have Ethereum showing more strength compared to Bitcoin in relation to that to push it forward. Now, that actually can give you a great indication in terms of the fact of Ethereum turning around if you had that Ethereum over Bitcoin
mm,
going higher. Absolutely. And that would be the best way there and could actually give you that really, really high indication that you've actually got a turnaround going on. So that could be a great way of being able to alert yourself if that indication, that ratio actually goes up. Use that as a potential sign, as well as a potential sign of saying, okay, once say Ethereum actually reaches up a point about above here, for instance, or above making a new high around above this particular lagging indicator, should it reach above those areas, that could be a way of being able to actually show to yourself and say, all right, hey, we may now be having a turnaround in Ethereum overall. That could be a way of looking at things. How does that sound as a potential opportunity?
yeah, very valid. So,
Okay, so that could be a way of looking at things. Now, looking at the DXY, this is the daily chart of DXY in terms of optics. This is not looking great either.
Looks like an altcoin.
It looks awful.
Mm.
Okay, yeah, exactly. A lot of the altcoins are looking like this as well. They are looking terrible right now.
Mm.
Okay. Now, Ichimoku overall there has already passed right through that Tenkan Sen that we were talking about. Looking ghastly. Okay. A long, long time ago, it passed right through both the Tenkan Sen and the baseline, right? So it was already showing signs of negativity going right through in terms of that. And what happened when it passed right through there? You remember there's a lag behind the lagging indicator. That sounds good, doesn't it?
Mm.
Right? Lag behind the lagging indicator. As soon as it actually passed right through that, what did the price action do? It was going down negative, right?
Mm.
Recovery, yeah, but what did it do afterwards? It gives you a potential indication well in advance about where it potentially can go. And sure enough, this is where it's going right now. So overall, not going all that great whatsoever. It's not looking fantastic. So now it's really giving you the full indication that it's passed through the price action as well too, and now we're really seeing that decline. But take a look at this. When you look at the moving averages, it looks even more ghastly. It's actually now passed right through all the moving averages
Mm.
overall. There's not even one moving average that's actually beneath this at this stage. You were saying before that essentially, if you have a negative DXY, it's usually positive for cryptocurrencies. At this point, they're both negative.
Mm.
So actually, they're both negatively correlated at this point in time. All right, what about the indexes? What did they do this week? Okay, let's take a look. In terms of the SPY, we were talking at the beginning of the week. This is where we were on Tuesday night, on Wednesday down here in Australia, Tuesday over in the United States. We were talking basically that it wasn't total death stations because we haven't passed right through the baseline area at this point in time. What did it do? It's basically bounced right off the cloud. Okay, cool. So that's positive for the bulls overall. Not too bad in that way overall. That's pretty cool. So that's been pretty good there. What we were really talking about more than anything else was basically the Russell leading the pack because the small caps were actually stronger than anything else overall there. That's been pretty good until the end of the week. Friday, the small caps blew off a little bit of steam and basically relaxed a little bit, but they lost about 2%. The small caps compared to the rest of the market, so we'll go back to the SPY for a tick. Okay, the rest of the market actually held up pretty well on Friday. In regards to the Dow Jones, what actually happened with that, in terms of a swing trading perspective, it actually formed down, a lower high, I should say. Now, in terms of the lower high, this actually occurred on the Thursday and was confirmed on the Friday. So that's actually really, really fascinating. A lot of people may not have actually noticed that. The way to actually determine that is taking a look at the high that was formed on the Friday, comparing it to the high that was formed on the Thursday. But you can only
Mm.
say that it was confirmed when actually the new low was formed on the Friday. So that's a really, really fascinating thing there as well. So we've actually got a very, two-phased market going on right now. We've got the SPY trying to form a newer high here. Likewise with the Qs, they're very, very similar in terms of the way the charts are formed. We've got the Dow, which has actually now formed a lower high. And we've got the Russell, which is essentially forming higher highs, but having a little bit of trouble towards the end of the week.
Mm.
So there's a whole heap of different speeds going on at this point in time throughout the entire market. So essentially what we can say now is that you can basically look at yourself in terms of being conservative and essentially saying there's some short-term strength in the small caps, no problem there at all. That's compared to the large caps, at least until the end of the week. So what we need to do essentially is we need to wait and see what the resolution is going on to figure out where to go next. That's pretty much about it in terms of taking a look at the charts there. If you're more aggressive, then you can see all the differences that are going on in relation to these markets, and then you can position yourself in relation to all of that. You can potentially be more aggressive in picking those shorter term stocks from those relevant sectors and be able to work out little trends from there, be it in the positive side or from the negative side. Alternatively, take a look long term, still maintain the plan like we mentioned earlier in the week, having a look at the plan, adjusting it accordingly if you need to. And with that, I'll pass it back to you, mate.
No problemo. So I'm definitely bullish long term, and I believe the technicals are moving towards better risk on environments. But based on Steve's analysis today, we are seeing that the technicals are still showing some caution. How we move ahead, that's going to be coming up regarding the upcoming weeks. Stick to your strategy, everyone, and we will see you next time.